Hello traders, and welcome to my video on the rate of change indicator. In this video you're going to see how you can use this indicator to catch moves such as this one for over 400 pips and this one for almost 400 pips. Okay, so the rate of change indicator is a momentum based indicator to indicate the direction of the trend and the strength of the trend. Here you can see the rate of change indicator attached to my pound dollar 1 hour chart. This is the MT4 platform. I downloaded a free rate of change indicator that does give alerts and notifications via email, SMS and platform pop-ups. If your trading platform doesn't already include the rate of change indicator, you can probably find it free online and add it to your platform. So just a quick overview of the indicator and how to interpret it. Basically anything below the zero line is considered a selling market. Anything above the zero line is considered a buying market. However, it's worth mentioning that these zones do then become overbought and oversold. So for instance, once the price here on the rate of change indicator is too high, the market can be interpreted as being oversold and there may be a reversal. Vice versa, if the price is too far below the zero level, the market could be considered to be oversold and there may be a pending reversal to the upside. Another thing to look out for with the indicator is divergence, which is basically higher lows suggesting an uptrend and lower highs suggesting a downtrend. That's perhaps a bit ambitious, that one. Lower highs suggesting a downtrend. Okay. Some traders like to keep an eye on the zero level here, just suggesting that this is where action can take place in terms of pullbacks into trends, but we're going to look at that in more detail now. I personally wouldn't use this indicator on its own. I'd be looking for confirmation via candlestick patterns, other price action analysis, certainly support and resistance levels, but I'll show you now how we can use this indicator in our trading. So first of all, we can see there's a support level here. It's held up well, so we're going to look for a reversal to the upside following on from this downtrend here. The support is holding well. Price is beginning to make its way up. If we look at the rate of change indicator here, we have some divergence, some bullish divergence to the upside, which suggests that we are seeing this uptrend gather some momentum. You can see the rate of change indicator, as I mentioned at the beginning of the video, is increasing, which suggests it's increasing to the upside, which suggests there's plenty of buy momentum. You can see here at this peak, there was a reversal. So this is perhaps the kind of area you want to look for timing your entry. We certainly don't want to buy at the peak here, which, as I mentioned, the zero level, when price pulls back to around here, can be a potential entry opportunity. Okay, so we could have, for instance, looked at an entry around here on the pullback to just below the zero line of the rate of change indicator, and then when price crossed back above, we could let's take entry here. For this particular trade, as I said, I don't just use the indicator on its own. I'll be looking at support and resistance. So we know that there's a resistance level around here, but once we see this pullback, we can wait for price to break through this resistance level, because we know that the rate of change indicator is showing good bullish momentum, and then the breakout could have been a good time to enter this trade here. Had we have done that, we could have had a trade potential of around 350 pips. Good thing about this trade is, as I said, we're using a 1 hour chart here, so it's minimum time spent chart watching. You can use the rate of change indicator on any chart time frame and any trading instrument for that matter. I just prefer to use the 1 hour charts and above, simply because I find them more reliable as they contain more price data, and less time watching the charts is always a bonus. You can catch some real big moves like this I mean, this trade was the course of what, 2 weeks, around 350 pips. I mean, trying to get 350 pips on the 5 minute chart time frame, you're looking at, what would that be? If you're taking 10 pips, take profit, and you need 35 consecutive winning trades to get the same you can get in one trade here on the higher chart time frame. But anyway, that just shows the importance of money management. And as the price, say we entered on the breakout here, rate of change indicator showing bullish divergence, nice momentum to the upside. We enter on the breakout on the pullback area here. We could have trailed the stop loss. So the initial stop loss I would have placed just below this level of support, which is around 15 pips, which is good. And then as price started to creep up to this area here, I would have been moving the stop loss. We'll just use this line now for the stop loss. I would move it here, lock in that trade for some profit. Then wait for the next pullback and the continuation. Again, move the stop loss up to below this level here, lock in some more profit. Perhaps consider exiting part of the position just to bank some pips. And leave the remaining to run, see if we can get the most out of the move. Again, pull back here, price continuation, so stop loss could come up to this area here. Again, pull back, price continuation, stop loss up here. So really we could have captured almost all of this move with sensible money management. The last thing you'd want to do is to leave your stop loss here, let price go up and come all the way back down and take you out for a loss or break even when you had all of this profit potential. Okay, so if you didn't want to take the initial entry, you wanted to see how things played out, you can also use the rate of change indicator to help you with that. For instance, if we wait for the breakout to occur here, then we have another pullback, as you can see, and again the bullish divergence is in place, suggesting there's plenty of momentum left in this move. So if you entered on this pullback around here, still would have been a decent entry for this particular move. And I'll just mark off, so the pullback here, you can see these candlestick patterns, bullish candlestick patterns here. Then you've got a support level to work from. So in terms of stop loss, if you did enter on the crossover here, the stop loss could be just below this support, which would be a really tight stop loss of around 10 to 15 pips. Okay, just emphasizing the importance of timing your entry again. You don't want to get carried away, see this trend and jump in up here, especially as the rate of change indicator saying the market might be overbought, as it was, and we had the nice pullback opportunity to enter here. Okay, and again, as we follow the trade upwards, there's some more pullback entries you could have you might have considered. It's worth mentioning with this one, if you didn't want to enter on this pullback here, you could just mark this as a resistance level and wait for price to break out above it if you don't want to trade against the resistance. As you can see, that would have still been a good trade, and this resistance then became a support level, as you can see it's touched there and there. Okay, and we still had the rate of change suggesting there's plenty of momentum without being overbought, so that would have been another potential entry. As we followed the trend up, another pullback around this area. Have to be cautious that the trend may have been slowing down. If you just look at the bearish divergence here, some people may have even taken a counter trend trade around here. However, we're looking at the overall bigger picture and looking to capitalize on this particular uptrend. That being said, if we use this resistance level, you could have looked to a trade on the breakout there. The rate of change indicator is obviously not perfect. This perhaps would have kept you out of this particular trade, as it was suggesting the market may be approaching an overbought state. However, there was momentum left in this move, which some may argue the divergence was perhaps suggesting that. This is why it's important just to confirm trades with different analysis. You can also look at the candlestick patterns there and use them for timing your entry. And even if you didn't trade the breakout, you again have the pullback down around this area. You can see the price is below the zero. Wait for it to cross up here. See the cross up on the rate of change there. That would have been a decent trade with a stop loss just below the support level of around 10 to 15 pips again. Plenty of opportunity left on this move, over 250 pips. So again, a good trade. And then as price comes up around this area, we can see that there is some bearish divergence starting to form. The momentum is slowing down. You can, even without the rate of change indicator, you can look at the chart there and see some consolidation and a range in market. We have this last rally up here, and then tweezer top candlestick pattern almost suggesting a reversal to the downside. Okay, so then we maximize that move. Now we're going to be looking at trying to enter in this new trade that is forming here. Again, the divergence, bearish divergence is in play with the rate of change indicator. So what we're going to look for now is we want the rate of change to be below zero. Okay, and look to time our entry on a pullback. I mean, that's assuming we weren't using just price action analysis. I mean, you could have, like as I said, you've got the tweezer top candlestick pattern, you've got a wedge pattern formed here. You also have this level of support. In fact, if we go back, you can see this level here was resistance, became support. So we could have been looking to trade a breakout here anyway, regardless of the rate of change. Crossover is still showing us the bearish divergence to the downside. It's why I don't rely solely on indicators and take them as gospel and have to only trade when they do X, Y, or Z. You can use your intuition and be aware of the candlestick patterns forming. Just look at the price action, mark your own trend lines and support and resistance, and sometimes can get you in a more favorable trade. If you want to trade as is the rate of change indicator, but then again, bearish divergence, wait for price perhaps to creep up towards an overbought state. I mean, probably not there. You want it to be higher. So we have this level here, a nice M pattern as well. Okay, showing resistance, and you can see that by just marking resistance on your chart manually. This level was support, it's been breached. It was support all the way back here, support here, it's been breached, it's become resistance. It's quite an important level. I have a triple top candlestick formation there. This resistance been tested 1, 2, 3 times, arguably 4 if you count this area here, which suggests that price may be reversing to the downside. Okay, so back to the rate of change indicator. As it comes up to this overbought position, we can look to sell once it starts to drop down here, which ties in nicely with this. See this support level here, price comes down, has a pullback and the breakout down there. Could have even taken the trade up here because we know there's resistance. That's held up really well. So you can see price rejected that level, and then a lot of traders would have been looking to jump in here. We have tweezer top candlestick pattern, basically when the high prices are the same or very similar with equal wicks, suggests again a reversal after that bearish candle to the downside. Arguably that's a level there we could have been trading off. That support level. This is, as I said, the 1 hour chart. So if you went down to the 5-minute chart time frame, you might see that is a more substantial support level there. But the price did break out again. Rate of change indicator and overbought. It's what we're looking for with it, and price did fall quite significantly. So that would have been a decent trade there for over 200 pips. You can follow the rate of change indicator on the way down. We have another few potential opportunities up here and here. On the overbought stages, I mean, Again, you just wait for the price to come up and turn back down. We have lower highs here. So you've got the divergence. Just keep an eye on the candlestick patterns, as I said. Also have so a wedge, almost a wedge-like pattern forming there. Just mark that off for you there. Wedge pattern forming there. You can see prices getting trapped in this range, and inevitably it breaks out, as you see from this big down candle here. So that tied in nicely with this initial overbought phase, then this overbought phase on the ROC rate of change indicator would have been another opportunity. You've got a shooting star candlestick pattern there. Okay. A level of resistance formed, so you might have been taking the trade off of that level. If you didn't get in initially there, you could have waited for the second test. Double top candlestick pattern, which means basically the resistance has been hit twice, at least twice, once, twice down, trade the breakout of this line here, the neckline. As you can see, that does then become resistance level. And then some indecision in the market here. You may be considering taking some profit, closing some of the position there, and as price becomes oversold according to the rate of change indicator, you're obviously not going to be looking to sell at the low along here, especially when we had all this opportunity to enter beforehand. Okay, so plenty of pips left in this move, whether you use the rate of change at the start. You know, if you look at the bigger picture as well with the divergence, you can see there was still momentum left there. I could have caught the move on the ledge here. Sometimes when you zoom out, it's just better to see the bigger picture. So this breakout, and obviously a few people are watching that, and you look how fast and far the market moved down there. Would have been a good trade based on the rate of change indicator again. Okay, this you can see is a high overbought point. If you want to trade it all the time like that, you can. It would have been a good trade. However, there will be times when it will peak like this, but the market will continue in the direction, as you can see here. If you would have taken a sell trade in the extreme overbought there, we know that we're in an uptrend, so it wouldn't have been. It still could have been 30 pips if you're day trading and you just want to counter trade against the trend. You can do that, but looking at the bigger picture for me is just easier and more profitable in the long run. Okay, well, hopefully that's given you an overview of different ways in which you can implement the rate of change indicator. Of course, everybody's different. There will be you may have your own way to trade, or your own strategy that you can just use this indicator as an extra filter. I mean, some traders may have just marked the trend line, just a basic trend line like that, and just wait for pullbacks towards the trend line and to check the rate of change indicator. So we have a big trend there, pullback here, rate of change overbought, sell, pullback here, overbought, sell, pullback here, and so on here. Another sell opportunity. Yeah, so as you can see, plenty of potential. Thank you for watching. Hopefully you found something useful in this video. Please like and subscribe for more, and I'll catch you on the next one.